Hi, I'm Mike Capizola from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a sector that was once the butt of jokes. However, it's had the last laugh and is now a big business in its own right. That sector is online dating. In 2018, the online dating market was valued at almost $6.5 billion in the U.S. alone and was forecast to grow more than $8.88 billion by the end of 2025, a growth rate of 5.45% per annum. The pandemic may have turbocharged that growth rate as traditional ways of meeting people have become logistically difficult at best. And one company that's well placed to benefit from these trends is Spark Networks SE. Spark was formed in 2017 through the merger of Germany's Affinitas and US-based Spark Networks Incorporated. The business grew quickly from a small startup to what was then one of the largest publicly listed dating companies in the world, with over 1 million monthly fee-paying subscribers. Spark's roots are in religious dating networks, specifically aimed at the Jewish and Christian communities before expanding into Adventist and Mormon networks. They've also added a silver singles business targeting the over 50s. Spark optimizes their matchmaking capabilities through the use of its behavioral sciences subsidiary, Zoosk, which has 40 million singles on its platform and itself is one of the top grossing dating apps in the App Store. The company also runs dating services for high-flying professionals and those with high expectations under the Elite Singles and Attractive World brands. Spark Networks recently reported second half and full year earnings for 2020, announcing revenues of $233 million for the full year, up from $170.9 million in 2019. The monthly average revenue per user is $20.93, a figure 7.4% higher than the $19.48 earned in 2019. The dating market scored a notable success earlier in the year as Bumble, the app that allows women to make the first move, listed in New York with the shares popping 63% on their debut, making a billionaire out of founder Whitney Wolfe Herd and valuing the company at $14 billion. Yet Spark Networks' market cap is just over $185 million. Yes, Bumble is profitable and growing faster than loss-making Spark Networks, yet that valuation gap seems far too wide. That discrepancy has caught the attention of John Hartnett Lewis, a former director of Spark Networks and a founder of Osmium Partners, a San Francisco-based investment management company with a specialty in undervalued small capitalization companies. Mr. Hartnett has been buying Spark Networks stock over the last week, picking up a total of 82,172 shares in 3 separate transactions for a consideration of $602,000, and he now owns just over 253,000 shares in the company. Osmium Partners have also added to their interest in Spark Networks, picking up 40,000 shares this month, taking its holding to 1.36 million. Spark Networks stock has risen by 23% over the last month, though at $7.10 it is well below the recent high of $8 and further still from its 2-year peak at $14.77. Spark Network isn't a bad business. It has 9-figure revenues and 7-figure user numbers. To put it bluntly, its cost of sales is simply too high. But if they can be brought under control, then those savings should head straight to the bottom line. However, it seems to us that the business would benefit from the economies of scale, and we may find this stock emerging as an M&A target later in the year. Perhaps this is what insider buyers are betting on. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions. And to find out more about our Trackstar IQ data, sign up for a free newsletter at investingchannel.com/Trackstar.